Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So, as we prep for this really hotly, closely watched, uh, much anticipated Fed meeting, right? Uh, there's actually a handful of things that are moving around and maybe usurping the spotlight a little bit early. And the two earnings, or at least the two most prominent earnings last night, Micron and FedEx, both pretty disappointing. I didn't touch Micron. Didn't like the setup. FedEx, I did. I thought FedEx was a really good setup, and if you, if you'd stopped by the coaching session on Monday, I spoke about this also in like the letter, in the nightly letter, talked about it, and in the video for on Friday, talking about earnings on the radar for this coming week. I really, I really thought that FedEx was probably my favorite setup of anything reported this week, and it wasn't necessarily a bias, right? So it's like I didn't approach this trade as a bullish bias or a bearish bias. It was just I thought that this was one of those setups that just lent itself to a pretty big move, and then when you couple that with what the options were pricing in, it just seemed like there was some really good opportunity there. And I'm going to walk you through it quickly, kind of what I did on Monday's coaching session. So if you want to go back and check that out, but there's a few things that FedEx there was a few things with FedEx this quarter that were different than the previous quarters. And first off, which really not too difficult to see, is the type of move that it had, right? 50 points down, basically in a 2-week stretch, here to here. So basically, say like 230 to 180 in a 2-week stretch right into earnings. And what that means is, yes, it's had a huge move, right? People have gotten more bearish on it. Maybe expectations have dropped. Oftentimes, if a stock has a huge move, I'll leave it alone. Like if it has a huge monstrous move right into earnings, I tend to leave them alone. But the reason why this time I felt it was a little bit different was option pricing, which I'll get to in a second. But first off, 50 points down, right? You've had multiple days exceeding 10 points, 10-point moves intraday. The volume has been expanding, right? The average trading range has been expanding, right? And the stock has dropped all the way down to retest a really key level from 2016, 2017, right? So that's what I saw going into earnings. Stock had come all the way down. Scroll a little bit further. Without putting it today. So the stock can come all the way down, expanding volume, expanding trading ranges, expanding volatility. And then when I looked at the options, you're like, okay, most of the time the reason why I avoid these is because the options get very expensive, right? Expanding volatility, expanding volume, big moves, the options tend to reflect that, and the price of the options get expensive. Well, when I looked at it, the FedEx options were priced in about 10.5 to 11. So that maybe is in line with the average, right? So when I went back and looked what it did this past year, you had a move here, right? This was earnings. This was about 14. Then you had a move in June here, I believe, which was about 9. And then I believe the other move was here, which was about 10. So roughly speaking, if you do like the rough average of the moves of FedEx this year, say it was about 10 points, give or take, right? Roughly speaking. So options are priced in 10.5 to 11 and moved about 10 on average. Now, that seems like it's a little bit more expensive, right? I mean, it moved about 10 on average. It's priced in about 11. But when you see the expanding volatility, the expanding volume, the huge intraday ranges, and the key technical levels, right? Then to me, that doesn't actually seem like a lot. It actually seems like it's underpriced because first of all, there's really no major significant support underneath, right? Which you can see on this chart. So if it lost this, you can make the argument that this thing should make a move into like the mid 160s because there's really no significant support until this. It's going back a ways to 2016, but you're looking at 168, 167, right? That's the next big area. So yes, it's had a large drop, but if it fell further, there's really no significant area of support underneath. Then, on the upside, so we'll talk about both sides, right? On the upside, obviously it dropped 50 points in 2 weeks, and there's a really obvious gap, right? The 201.39. So when the stock was at 183, 184, 185, you basically had visibility on the chart for 15 to 20 points in either direction. So when I cross up things that are on the radar and why I like setups, it's A, right? It's A, what has the stock done in the past? B, what has the stock done recently? What are the technical setups, right? Are there interesting technical levels that could trigger a bigger move? And C, what are the options pricing in? And A, B, and C all were met for my radar, like what I wanted to see. So that's why I thought FedEx was a really nice volatility candidate. So in this case, we went with the strangle, basically targeting call spreads 10 points, 15 points in either direction. So it was the 200 to 210 call spreads and then the 170 to 160 call spreads. So the stock went out yesterday at 185-ish, and the spreads were about 15 points in either direction. And then obviously you can see a big gap down today. Pricing in 10.5 to 11. What did it move? Well, it moved 15 to 18. So you can see that, those options did in fact, they appeared to be underpriced, and they were in fact underpriced because the stock definitely exceeded that. So it's not always, like the moral of this video is that I just want you to look at these trades not necessarily, well, do I think it's going to go up or do I think it's going to go down? A lot of times what works for me is looking at the stock as, well, do I think it's going to move, right? And if I have more confidence that it's going to move, then I look at the options and I'll see what the options are pricing in. And a lot of times opportunity presents itself that way, not trying to pick whether the stock is going to jump or pick whether the stock is going to get hit. It's more deciding whether I feel like there's a good chance that the stock is actually going to move and move more than what the options are pricing in. So Fed's coming up, so probably still going to have a pretty significant move the remainder of the session. I mean, as of this video, still looking for that 4.9 points, which SPY was pricing in coming into today. We're not quite there yet, but with 2 o'clock and the Fed rate decision coming up, we could have a pretty busy conclusion to the day here. So buckle up. I hope you guys have a fantastic night. Best of luck with trading the remainder of this session, and I'll talk to you guys all tomorrow.